Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 22nd, 2011. Now our first position for tonight or tomorrow, depending on when you're looking at this, is going to be in the August gold futures contracts. Now, we've got some things settling down in the Eurozone with Greece and everything, but again, this is clearly a house of cards over there. I think that the global investors are going to stay looking at, they're going to look to push gold higher. That's probably what's going to happen. We're going to have a volatile day tomorrow with the FOMC, so we don't want to get too aggressive on our trades, but there's certainly a pattern forming here on the Vantage Point software. We're coming up, we're rising higher here on gold, 1532.90. 1532.60 and 1542.50 with a close of 1546.40. That's a bullish move. We can see that the triple EMA cross is pushing back up. We're going to now run through these major crossovers from Vantage Point. We can see that starting with the short-term crossover here, we've crossed to the upside about 3 or 4 days ago. Our medium-term crossover is very fresh. Only about a day old, a day and a half old, and our long-term crossover continues to struggle, but it's looking better. So coming back from a medium-term perspective, we can see that our predicted short, medium, and long-term differences are all basically moving above that zero line, which is very, very important. Not only that, it appears to be getting ready for a trending move. Now, this is again critical to put all these indicators together, not just stick with one or two indicators. We want to use as many of them as we possibly can. Now, I prefer to use the predicted TSI and the predicted MACD in confirmation. I don't quite have that yet, but you can see that the predicted TSI from Vantage Point is just getting ready to cross that trigger. So everything looks good here. We got the FOMC tomorrow. I don't think that doesn't spell a strong dollar to me, because there's certainly nothing the Fed is going to say. It's unlikely the Fed will say anything that will strengthen the US dollar, and most of your investors are going to go back into the equities, back into your metals and your higher risks currencies like the euro, the pound, the CAD, the Aussie. We've seen it. This is the trend we have to deal with, the correlations as of late, so that's probably what's going to happen. We know that 1532 area is a pretty critical level of support as identified by Vantage Point. So let's go into the daily report now and see if we can fine-tune this a little bit. We've got 1541.70 and 1554.20. Now we do have that 18-day predicted moving average lower down around that 1532 area. You can see that the close this is the highest close we've had in gold in basically the last week and a half, 2 weeks. So that alone is a bullish sign. And then going into playing the short-term play that the FOMC is going to kill the dollar, gold's going to push higher, equities higher. It's a reasonable play. So for tomorrow, we can maybe adjust our entry a little bit. 1541.70, that might be a little bit aggressive, but before I say that, let's go back onto our main chart here and have a look and see how accurate Vantage Point has been predicting the high and the low. Looking at this, it's been pretty accurate. So you can see the red line is the Vantage Point predicted high. The black line is the Vantage Point predicted low. We continue to tag the upper band, which is the predicted high. So I'm going to go with Vantage Point here. We're going to say 1541 is our entry point. That in my opinion, may be a little aggressive. I would buy down to the 1532 area because we are going to see volatility with the FOMC tomorrow. So we've got 1541.70, so 1541.70 is our entry. Our target for tomorrow, 1554.20. We should be able to hit that target with the volatility expected. Now, excuse me, Bernanke could kill this thing in a second if he hints at, QE is done, inflation's picking up. That will send gold lower. So we'll see. I'm pretty confident that Bernanke will not do anything to support the US dollar tomorrow. Now that's our first position for tomorrow. Our second position is back in the Forex market. Specifically, we're looking to buy euros, but I don't want to buy them particularly against the US dollar. I think that particular pair is going to see a lot of stop loss runs on the top side and the downside. So I'm okay with buying euros on this recovery, you know, the house of cards is going to stand for another couple of weeks or a couple of months until the next debt crisis over there surfaces, which will probably be sooner rather than later. So against the US dollar, I'm not that comfortable buying euros just yet. So I'm going to move to the cross pairs. Now, what I like about this one, again, our triple EMA cross is just making that crossover. If I go into my individual crossovers, the short term looks good. The medium term is just crossing over that trigger, fresh, brand new today. And the long term is still running flat to slightly downward. Our predicted short and medium term predicted differences are also breaking above that zero line. These are all things that I'm looking for to get into this trade. One indicator confirms the other indicator, confirms the other indicator. Very, very important that we're looking at all this. Now, our predicted MACD and our predicted TSI just getting ready to cross that trigger, so we could have a trending move back up over that 89 area, at least in the short term. So what we want to do here now is we want to identify our key support. Now, by identifying those supports, I'm going to use the three vantage point predicted moving averages using the triple EMA cross, the 82.22, 88.33, and 88.47. We've closed at 88.71, so that's relatively bullish for the euro against the pound. Pounds, you know, Great Britain's certainly having their economic difficulties also. So euro carrying a slight edge in a recovery rally, if nothing else. So what we're doing here is, since we've identified that, we know we want our stops below 88.22. We now want to fine tune our entry point. We're going to use, again, the Vantage Point daily report. Now that we've looked at all of our other indicators and we're basically forecasting that this is going to move up, we can then take it one step further and fine-tune this entry point. Now, again, the markets never go straight up and the market never goes straight down. So we're looking for a pullback towards this 88.37 area. Once we get into that, once we get that minor pullback on profit taking, etc., then we're going to use that to get to trigger our long position. This is a fairly decent trade. I would put my stops on this trade around 87.75, 87.80. We don't have to get carried away with this thing with a 100-point stop loss. I think if we lose the 88 level, 87.90 level, it's going to go much lower. I'm still not convinced that everything is just rosy in the Eurozone here either. They still have a lot of work to do putting a plan together to show growth in Greece. They're anything but out of the woods here, guys, to be very clear. So again, we're looking at catching this short term. So 88.37, our target is 88.96. A little more aggressive traders, they could hold out for the the 89.20, 89.30 area. Could be a tall order at this particular junction, but it's possible. And again, we want to keep our stops relatively tight. Down in that 87.75 is a reasonable area because we don't want to sit here. We don't want to get caught long here either if the euro tanks. So with that said, these are the market positions for June the 22nd, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.